I have been promising you this particular episode now for days, so I know you can hardly wait to find out what it is that Larry is going to unveil. Larry Goldberg, glad to have you back.
Thank you, Randy. It's great to be back.
Right. So if you like having Larry on, you know what to do. Like and then subscribe, hit notify, and all that jazz, and follow Larry at Tesla Larry. It's so easy. Tesla Larry. Larry Goldberg, you've told me about a week or so ago that you had something really special. And then you've been working hard on it. I know that. And so I am going to kind of turn it over to you. I'll probably interrupt you from time to time because I have that reputation.
Yeah, I was going to say, I doubt whether you will let me go too far and too fast. So let me start by saying that, I've actually posted on Twitter several times my ideas about Tesla becoming a supplier to their fellow OEM, auto manufacturers.
Yes.
Original OEM is the term for a car manufacturer, and it means original equipment manufacturer. And
I think it'd be worth it, Larry, to say that somebody who makes equipment for another factory is also an original equipment manufacturer. So it gets a little confusing. So
we unscramble that confusion here by calling those who manufacture equipment for the OEMs, we call them suppliers.
Okay.
And, the very largest of them, and you'll see this in the presentation I'm about to share with you, they're called tier one suppliers. Mm-hmm. And tier one suppliers then turn are supplied by other suppliers. They would be called tier two suppliers.
Yes.
And so it goes on and on and on and on. And I'll discuss that. So for the purposes of today's discussion, an OEM means a car manufacturer, and a supplier means somebody who supplies that car manufacturer.
Right. Okay.
And I'm going to argue that, that Tesla has a really great business opportunity to leverage its leadership in the EV space to become a supplier to other manufacturers, to other OEMs, and help them in the transition to electrification. Okay. And I know this sounds counterintuitive. Won't they compete with Tesla? Blah, blah, blah. But actually, if you think about Tesla's mission, nothing will speed the transition to sustainable, a sustainable future than getting everybody, over this hump as quickly as possible. And there are very strong reasons why Tesla should do it for that reason. And also because I think it's going to be a very profitable sideline or a very profitable line of business for Tesla.
And another way to say it is Tesla can't get there by themselves. So
absolutely right. These other companies or new companies are going to get there anyway, right? Because Tesla's created this gigantic opportunity, and everybody with a sense of how to do good engineering and with capital is going to get into the business. So I think it would be really in their interests to do it, and as soon as possible. And if you think about robotaxis, in the future, there just is not going to be enough of them. And so the more rapidly we can do this transition, the better for everybody. So I've built a whole bunch of slides to try and condense my discussion as best I can. So if I can share my screen and show it.
Have at it. Have at it.
Okay, so let me share. And I'm hoping you can now see it.
Looks beautiful.
Well, I don't know about beautiful, but anyway. So I'm going to start with a little lighthearted jab. Back in July 2018, when we were in the middle, or we were coming out of production hell. Elon posted very, very triumphantly, 7,000 cars, 7 days. This was July the 1st, 2018. I remember it very, very well because I was following, the Bloomberg had a web page. They had a page that tracked VIN numbers being registered so that you could see what Tesla was delivering, because Bloomberg were, they're very negative on Tesla, and they were kind of down on Tesla. They were going to try and show just how poor Tesla was performing. But to their surprise and to my delight, Tesla kept exceeding, what the pundits were saying. And I was using this to really bulk up on my Tesla stock, because I saw this break coming, and indeed it came. I mean, within a year, the stock took off. But, within minutes of Elon posting this came the riposte from this guy called Steve Armstrong. He's an executive at Ford. He said, 7,000 cars, 7 days. We do 7,000 cars in about 4 hours. Take that, Mr. Musk. Well, this thing didn't age well.
No.
Fast forward a bit, and there was this fantastic video that Monroe Live put out. Monroe Live really, they take apart cars to see how well they built and how well they designed. And this is a complicated slide because it condenses this, long and very amusing video. But I wanted to show you a few things from the video. This is the Mach-E frunk. Count them. Actually, there are a lot. I haven't even counted them, probably 20, 25 components. So this slide really speaks to where Ford got to in June of 2021, when they finally delivered an EV, the Mach-E. And on the left, we have some pictures, some outtakes from the Monroe Live video that Sandy Monroe did. And on the right-hand side, we have pictures of the Tesla components. So on the left, in this top left-hand picture, let me actually put my pointer on. In this picture here, we see the components of the frunk. You'll notice that there are probably 20 components here. I haven't counted them, but there are a bunch of components. And many of them were afterthoughts due to regulatory or design problems. This is the Tesla frunk from the Model Y. Exactly one component,
right,
compared to the 20 components of the Ford frunk. Now let's examine the cooling system on this Mustang Mach-E. I mean, Sandy goes into a long story about how bad these clips are and how these pipes tend to leak, and the cost of putting such a thing together, and also the weight of the water carried in the pipes, not to mention, the sort of layering of component upon component upon component upon component. And the most amusing part of this is that this particular component has stamped on it scrap if dropped. So, so this is the Mach-E engineering, and this, in comparison, was the Ford Octavalve and the super manifold that replaced all of this and more. And the point that Sandy was making, a couple of die-cast parts weigh a hell of a lot less than an enormous amount of liquid.
Yeah.
And are far less trouble, are trouble-free compared to the troubles that, these kinds of clamps and joints and T junctions and so on produce. So,
not to mention the hand labor of putting them all together.
Oh yeah, I mean that goes without saying. And this is why the production of the Mach-E didn't quite reach, 7,000 cars in 4 hours. But you know what the good news is they didn't produce that many because they lose $66,000 per EV sold in 2022. And they expect losses to spike again in 2023. So that, the bad news is they're losing money on every vehicle, even though they've got this very, primitive design, or probably because they have the primitive design, but they're not selling many of them. And in fact, sales are really not doing that well. So this is really, the comeuppance for, this braggadocio that Ford strutted out when, Tesla was going through production hell. But it's not just Ford. It's not just Ford. News today, Mahindra secures second supply as MEB components are delayed. So Mahindra, a very large, in fact, the largest Japanese manufacturer of vehicles, signed a deal with BYD to supply the battery. Why? Because their supply from Volkswagen is delayed. So Volkswagen have this platform, they called it the MEB platform. They're supplying it to other manufacturers in order to reduce their cost because, they're so experienced and they know so much and they're such great engineers that obviously their EV car is going to destroy Tesla. In fact, I have this long-standing argument with a guy. I won't name him here, but I captured his, his posts on Twitter schooling me on how Tesla was going to be thoroughly beaten by Volkswagen, and by 2023, Volkswagen sales were going to be double those of Tesla because Volkswagen have all these thousands of plants that they're going to be blah blah blah. You know the story,
yes,
really.
Yes,
you know the story very well, but they're struggling, and the MEB platform is not actually coming out of the factory, and they're now talking about an ME Plus platform. Frankly, because the MEB platform was so poor. And, they're just not getting the supply out. And Ford, who signed up with them to use their platform for this new crossover in Europe, is going to delay that crossover.
Yeah.
And, GM, we know, their battery woes are significant. That sank the Chevy Bolt. I think they're going to have the same problem with their Ultium platform. They're having the same problem with the Ultium platform. I mean, Tesla's not alone in, building up this capability, but Tesla are years. Some say 3 years, some say 2 years, but they're years ahead of the pack.
Of course.
And, it's time, it was time come the end of last quarter for Ford to eat humble pie. And, this guy who strutted Ford's production capability really, Jim Farley put this record straight. He said in the last earnings call, actually, one of the biggest eye-opening moments in my personal career when I realized we had to completely change our approach to platforms. I hope this also means he's going to deep six the Volkswagen relationship. The inverter technology, I've shortened what he said here, but he was giving a litany of the componentry that just doesn't work, doesn't translate, from, an ICE vehicle to a EV.
Right.
He says we have to go left to beat these competitors that make EVs. And what does he mean by go left? It means he has to reinvent his company. And he has to reinvent his company while he's trying to keep his company afloat with ICE vehicles. But the problem is, we know the problem. So the problem is, apart from the challenge of reinventing the vehicle itself, the bigger challenge is that the OEMs are really, really poor businesses. I mean, I've got a slide here showing the return on assets in the 6 months to 6/30/23. Look at it. I mean, you could say that Mercedes kind of gets by. They're getting a whole 6.1% return on assets. When, by the way, you can invest money in the, oh, I've got to pop up, sorry. You can invest money, you know, in a treasury bond at 5%.
Right.
Why would you invest money in Mercedes-Benz at 6%?
Yeah.
Only Ferrari and Tesla, the king, are really earning what is a reasonable rate of return on assets. You know, Mercedes are marginal, and Stellantis actually are doing quite well on return. But beyond that, every one of these OEMs are not earning really the return on a you know, gilt on a treasury bond.
Right. Yeah, you could put in a certificate of deposit and get more.
You know, why even put into a certificate of deposit when you get even more directly from, you know,
the Treasury,
the U.S. Treasury? So my point is, it's going to be very, very hard for these companies to reinvent the future. So let's turn to the question of their suppliers. And this is the point I made a little bit earlier about the tiers in the supply chain. If we look at the OEMs, they're at the top of this, you know, this sort of, I guess it's some sort of pile of suppliers. And there are 141 what they call sites. I'm not sure that it means 141 different companies or 141 different factories, but for the moment, OEM assembly and parts plants, there are 141 of them. Tier 1 suppliers have got 5,241 sites, about 30 times, about 30 sites for every OEM site. And then it explodes from there to Tier 2, Tier 3, Tier 4, and then we've even got a Tier N, where they don't even make the Tier 4 cut. But the total number of sites are 285,776. In other words, you know, for every manufacturer out there of an automobile, there are 2,000 times as many factories supplying them. Can you imagine reforming that supply chain?
Yeah. So for those people in the audience who have never been in manufacturing and for whom this might seem a little beyond your imagination, I sometimes think of it in terms of clothing. So this beautiful Hawaiian shirt, thank you, Hawaii, for creating such beautiful shirts. And I'm so sad about Maui. I continue to be so sad about Maui. So the shirt is made up. So the shirt, somebody is assembling the shirt at some point. But they would have to buy the buttons. They would have to buy the thread. They would have to buy the inks that color the threads or color the buttons. You know, and so then the button maker, he's buying the plastic from his number one tier, but the number one tier is the number two tier now for the shirt maker. And so you can keep going down. The plastic maker has to buy the raw stock to be able to create the plastic so that they can sell it to, et cetera, et cetera.
And to add another dimension, Randy, these guys have to buy the machinery to make the plastic or to make the button or to make the shirt.
Right.
So the machinery supplier in turn has to get supplies of the steel and of the machinery they use to make the machinery that they supply.
Exactly.
So, the supply chain really explodes out, and this gives you a sense of that explosion. And the real question is, can the supply chain supply the technology the designs, the revolutionary ideas that the EV product, the end product that the EV needs. And so I went to that question. So I went to look at the OEMs, the tier one suppliers to the OEMs. And I chose the top 10 because below the top 10, they're really getting to, kind of a size that it's unclear that they would have the heft to bring to bear to provide these huge OEMs with what they need. And here are the top 10, and it starts with Bosch in Germany. Not surprising that Bosch, is the largest. And then it goes to a Japanese firm, another German company, another German company. Then it goes to Canada, then it goes to Korea, to Japan, and Michelin in France, Bridgestone in Japan, and Cattle in China. So when we look at these suppliers, they're of a good size. And you would think, wow, maybe each of them, like Bosch in the electrical side and the software, Denso, in some of the componentry, maybe they can bring to bear the kind of capital and the kind of evolutionary or revolutionary thinking that could support these OEMs in their difficult transition. Not so much, I'm afraid. Because when you look at their financial condition, it's awful. Just awful. Remember, we were talking about return on assets a little bit earlier of the OEMs. Now I'm taking a Bain study from 2 years ago, actually, and things have only gotten worse since then. On operating margins for these leading global auto suppliers. And basically, this axis is debt versus EBITDA, debt versus earnings, and this axis is operating margin. So really, it's only when the operating margin is sufficiently high and the debt burden is sufficiently low that you have, a safe margin in bad times, but also the kind of margin you need to make the investment you need to make in order to support this complete change of structure. You remember how Ford said they have to go left. Well, without money and without margin, it's not possible to go left. And so what we're looking at is 7% of the OEMs that are really in good shape, and another 17% that are kind of there. So 1 in 4 are going to make it.
Yeah.
This is not really a good picture for a revolutionary supplier or group of suppliers.
And where that supplier is going to be asked to make these investments on the come, because the manufacturers do not have the track record of actually building out their new fleets of these electric vehicles anywhere close to what the expectations were. So
they're great on promises of the number of models they're going to be introducing and the millions they're going to be selling, but delivery is not so much, as we've seen in the Ford Mach-E, for example, and as we see, on GM delivered 36,000 EVs, 36,000 EVs in the first half of this year.
Yes.
And they're talking about introducing 5 models
that
are going to sell, 1.5 million cars in next year. I don't think it's going to happen.
I don't think
so. So now what is interesting is right back in 2018, another consultant, this one, Oliver Wyman, to the auto industry, came up with this concept of what it's going to require to provide this new technology and these new designs. And they came up with the idea of, all these separate disciplines that are going to be needed, an e-drive and battery specialist, an autonomous connected specialist, a digital technology specialist, a digital module system integrator, a ramp down supplier for all the old stuff. Well, and advanced engineering and digital services and software providers. Well, two comments. The one is, I don't think even Oliver Wyman understood the integration or the integral nature of these different disciplines, that they're really not separate suppliers. They're really a single unitary whole that has to understand the entire design, not just their piece of the design, which has been, the tradition in the past. So Bosch supplies, this component, and then maybe, one of the other guys supply that component, and then they have to work together. And that's the same thinking going on here.
In other words,
sorry, go ahead.
Again, in other words, let's see if we can, put this into a little simpler concept. The way things have worked for the last 40 plus years is that if Ford wanted to build a new model, their designers would create the design of the vehicle. They would create all of the what they expected to put inside of it. They would go out to suppliers for quotes. Commonly, as Elon says, they would be looking at a catalog of what is offered and see if something was already meeting the specification, already the right size, right shape. They would try to fit the cataloged item into what they were doing. And this would simplify the process. And it meant that the manufacturer of that component was making millions of these amongst a number of OEMs, as opposed to just Ford making a couple 100,000 of them or whatever the number, but in much smaller quantities. Therefore, there was a differential in the cost to manufacture it by the tier 1 or tier 2, whatever, compared to what it would cost Ford to make it themselves. And this differential would be the profit for the supplier. And the benefit to Ford is they didn't have to have all of this stuff manufactured in their own facility. The negative on that, of course, is always this guy makes it and says he got the spec right, and it comes in and the spec isn't right. But you don't know that until you're trying to put it in the car in the line, and somebody sends you something that doesn't work quite right, and you don't know that because it's an internal problem. You have all these issues that can throw all of this into a horrible mess. But over 20 years, 30 years, 40 years, they got it down to a pretty good science. But now all of a sudden, you're asking all of those suppliers to switch everything that they're doing and begin to supply you revolutionary new stuff. And your team doesn't even know how to design it because it's all brand new to them as well.
Right.
So you've got a dilemma all the way down the supply chain.
And this slide really speaks to what this consultant conceived of back in 2018 of how they would approach fixing this problem. And they approached it sort of in a separate disciplines, separate sort of suppliers for separate disciplines, which is a terrible idea, by the way, a terrible idea. But for all the reasons that Tesla has, brought so much of the design of the vehicle end to end in-house, and they don't use a part that's freely available on the market, because that part requires them to adapt their design to that part. They instead design a part that they want and they need, and the key to their design is that no part is the best part mantra. The idea is to rethink everything from scratch, that 100 years of accretive layers haven't been kind to the end product or the end design. Although I have to say, an ICE vehicle is an extremely complex piece of machinery.
Yes.
And the industry has perfected it over time. I think the ICE vehicle is the best possible representation of what an ICE vehicle could ever be. I think we're getting to that point, in the manufacture. But Tesla's point is that it's just not good enough, and it certainly doesn't lend itself to an ICE vehicle. And in a way, this thinking that Oliver Wyman has is kind of old school, but they do have one really good idea, and that's this guy called, let me just put my pointer back on, called the tier. Oh, my laser pointer is not switching on. Why not? There we go. Tier 0.5. And the idea about tier 0.5 is that this is a tier that integrates directly with the OEM.
Okay.
And is part of the OEM in terms of building, out the solution. If that tier 05 could integrate these componentries, these 2, 3, the eDrive and battery specialist autonomy connector that runs across 2 and 3, and provide the advanced engineering and digital services and software, then we will have a magic solution. Because that tier 0.5 can go in to the OEM's shop and work with them to reimagine their vehicle, to reimagine, because they're specialists, because they know the EVs very well, and because they have a proven track record and proven designs.
Yes.
They can provide the solution. So,
and then there's one more aspect. One more aspect is that Tesla, when they're needing to resource new parts and pieces that they don't want to do in-house because they're not set up to do that particular kind of production. They don't want to, for instance, processing or the new facility down in Corpus Christi to process lithium. They didn't want to get in that business. That's a complicated business. They didn't want to get into it. They felt they were forced to get into it. But there's lots of the parts that go into a car. Let's say, for instance, the tires.
You're jumping a little bit ahead of me, Randy. I'm sorry.
I'm going
to come to that very issue, and I have a slide that talks to it. Let's revisit that in just a minute or so.
All right.
So what I did is I went to find, somebody that spoke to the items that really are in Tesla's core competency. Unfortunately, I found this Deloitte automotive supplier study that looked at the growth segments in the coming years and what areas are going to show growth in auto supplies, what areas are going to be stagnant, and what areas are going to decline. And happily, and not by accident, the growth areas are mainly, not all, but mainly in Tesla's sweet spot. So there's the drivetrain, there's the battery and fuel cell, there's the ADAS and its sensors, there's electronics, there's the body, I'm thinking of the structural body,
Sure.
There's the climate control, and there's the infotainment. I've left out steering, I've left out interiors, although they do interiors, and I've left out wheels and tires. To your very point, and I'll elaborate on that point in a little bit, but these are areas that Deloitte have identified as very high growth areas. Stagnant are things like chassis and frames, suspension, transmission, seats, brakes, axles. And declining, obviously, is ICE, exhaust system, and fuel system. You don't have those in EVs.
Right.
So my point is that the very areas of growth that Deloitte have identified, they map directly to Tesla's primary strengths.
Yes.
Right? And actually, Deloitte give numbers, and they're stunning numbers, to the market size in 2022 for those growth areas and the market size in 2027 for those growth areas versus the stagnant and declining market. And I've actually done the sums. The 2022 market in those areas are $453 billion. The 2027 numbers are 604. It's only 5 years' time.
Yeah.
So it fits Tesla's focus, and that it's this very rapidly growing area, and it's the area of their absolute expertise, and it's area where they could bring design plans, production detail, production plans directly to the OEMs and be that 0.5 tier, in their factories, helping them design the factories, helping them build the factories, helping them figure out the supply chain, helping them design the vehicles, helping them perfect the vehicles, and helping them deliver the vehicle, get the vehicles delivered. My point being is that they have all the smarts and expertise that these other OEMs lack and their suppliers lack.
And part of what I was actually going to say a minute ago is one of the reason Tesla's tier 1, tier 2, tier 3 suppliers are so good is because Tesla goes to them and works in their factories, and they make sure that the tooling, the processes and procedures, the speed of production, et cetera,
you're speaking to the slide.
Okay,
you're speaking to the slide.
Okay.
So Tesla relies on tier 1 suppliers for commodity items, the so-called blue items. Look at them. The rear strut, the electric AC compressor. By the way, Toyota supplies that. This is from Tesla's bill of materials. Yeah. This is their supply. Sorry, not their bill of materials. Their supply listings.
Right.
And this is, for the various models they have, who they get the parts from. So to your very point, the point that you're making a moment ago, that they don't supply all their own parts. They go for electric compressor, they go to Toyota, a fellow OEM. To ThyssenKrupp, they go for the rear strut, the driver airbag, TRW in Mexico, and so on and so forth. By the way, an interesting point here, they buy a vent duct from a company called Vallejo Group. It's a big supplier, sourced by Monroe. So Sandy's definitely helping them. It's part of, I guess, Sandy's business. But you get the point I'm trying to make here. And this is really your point, right? This is exactly what you were saying. Now let's look at the parts that they insource. I also took another, slice of the bill of materials. Now, when we look at what they insource, the ECU, the battery pack system, the seat. I'm not sure seat is really the key, but it's actually interesting that even though they manufacture it, it's sourced by Monroe. So they must have brought a manufacturer in-house that Monroe brought to them. It's very interesting. The traction motor, the battery pack system, the traction motor. My point is, these are the high growth components. These are the greens.
Right.
And these they manufacture themselves. Why? Because they're critical to the mission, they're critical to the transition, and they really need to design. Now, having said that, I am certain that what you said about these, and I'm going to go back one slide, about these suppliers is they work very hard to make sure that the supply that they get from these people integrate with what they have in mind.
Larry, many, many years ago, I wrote an article for Inc. magazine called Virtual to Vertical, because my little plastics manufacturing company had been literally 100% virtual. No building, no secretaries. Everything we had was done by somebody else. Over the course of 3 years, we went 100% vertical. And the main reasons were we couldn't find anybody who could do the product correctly.
Yep.
We couldn't find somebody who could do it at the right price. We couldn't find somebody who could do it at the volumes that we wanted. Sometimes that was too low a volume. Sometimes it was too high a volume, but it wasn't the volumes that we required. We didn't have any.
Or your customers required.
Or the customers required. And sometimes they were not flexible enough to handle our needs. And then sometimes, even after we decided on a supplier, the product that they were supplying didn't continuously fit or didn't continuously come in with the right color
Right.
et cetera, et cetera. So Elon found the same thing in the early going of Tesla, and slowly but surely, against his interest, guess what he really wanted to do? He started replacing these various components with in-house manufactured products because he could count on them. He knew what the price was going to be. He knew what the volumes were going to be. He could coordinate the entire thing. But then he took the next step. And this was the point I was trying to make a minute ago. And it's so critical to what you're trying to say, is that then they didn't just receive these parts and check the parts, do QC on them when they come in. That's how most factories work. You get the part, it's supposed to be to spec. You've got a receiving department that does the QC. No, they do what Costco does. And one of the reasons Costco is so successful, they go to the company, they reorganize the specs if necessary. These are what we want the specs to be, not what you're doing. We're going to improve your product. And maybe you can sell it to other people in the improved way. Maybe you can't, but we're going to help you improve the product, improve the processes, improve the costs. And then we're going to sit here while you're making them. We're not going to QC them when we get them. We're going to make sure you're doing them right before they ever leave your factory. And that kind of quality control and that kind of oversight of the processes, procedures, and design is unheard of.
Exactly. But, you know, that's something that they can bring with them to a third party.
Yes.
But the point that the point we mustn't lose sight of in this thesis is this idea that Tesla have got a handle on the green items, on the items with high growth,
right,
items that are critical to the mission,
yes,
and the items that the other OEMs are struggling with, and their suppliers are not, really fit for purpose in terms of supplying them.
Yes.
And you only have to look at the struggles of Mahindra or Ford when they're trying to buy from the likes of a Volkswagen and so on. So that leads me to, the thesis that Tesla should start a licensing, engineering, and supply program to provide consulting and support, the very thing you were just talking about, that they do with their suppliers, teach their customers, their OEM customers, how to do it themselves, how to design the vehicle, how to refine and perfect their production methods and their systems, and how to design their factory. After all, Tesla's product is the factory. It's the machine that builds the machine.
Right.
That's their product. That's what they're selling here. The product is the machine that builds the machine, right, and that's what they can sell and provide to the OEM.
Which they've also proven repeatedly.
Yes.
Their return on invested capital is way up here compared
to...
Well,
that goes back to that slide I showed earlier. The reason for that very high return on assets is that very thing.
So therefore they have that same benefit I talked about earlier. They could literally build the entire factory, sell it to the company for what they would have paid anyway, what they would if they've done it themselves, and Tesla can make the margin.
I'm more liberal than that. I would actually say to you that I think Tesla should teach the company how to do that themselves. Why? Because the company doesn't want to be dependent upon Tesla to come and build a factory for them every time. They want to learn the method. They don't want to buy the end product.
Yeah.
And why is it in Tesla's interest to build fierce competitors? Because the car is not the product.
Right.
It's the business model and all that goes with, what they build around the product. A lot of people say, well, I'm not that crazy about the Tesla car because of this design issue or that design issue or whatever. Fine. Let them buy a Ford EV.
Yeah. Yeah.
But that Ford EV needs to have all the capability, all the the benefits of
the specs,
like charging, but like all the other benefits that a Tesla has. And that's to the point of the mission.
Right.
And then Tesla can also provide direct supply of components, of batteries, and a drivetrain. Not every customer of theirs is going to want to make everything. Right. Just like today, they don't.
Right.
But Tesla can provide them the drivetrain. They can provide them the battery packs, whether they make the batteries all themselves or they buy some of the batteries in, or they can teach the company how to make battery components. And so those, that's a customer by customer basis, and it's also a time basis. It may be a very big advantage for Tesla to expand their production, and they can get there much faster than the customer can build their own plant.
And of course, again, I think your point earlier, even though you were making it about Tesla's supply chain, but you can take that issue and expand it, is that all of these OEMs are trading with one another. They're already even white labeling entire cars, but they're also selling components. They're selling different parts that they do well. Yep.
Exactly. And then software consulting and licensing. I'm sure that, to our audience, we don't have to explain how many years Tesla is ahead in terms of that. But FSD, if the vehicle operating system, central and peripheral ECUs, the vehicle app, the infotainment, the charging and routing, all the above.
And the factory system as well.
The battery management system.
The factory, yes. The
power management system is part of the vehicle operating system, I hold. Yeah. So, what's the potential? How much can they earn from all of this? I want to try and keep us in some reasonable time scale. So I want to wrap this up with some numbers. So there's consulting and supporting, vehicle design, production, and system. These are very high margin businesses. It's a business I know very well, but they're very relatively low revenues. I mean, we're not looking to run to billions and billions of dollars. We're talking about maybe $1 billion, maybe possibly $2 billion. Even that's high. But I mean, in the value add that Tesla brings, it could well be possible.
Okay.
So even though it's only, anything from 250 million to 2 billion, the margins are such that it's accretive instantly to the bottom line and will make a difference to the Tesla's bottom line and margins. Then direct supply. Now, obviously, parts are not going to give you a margin of much better than 15%. Maybe in early stages we can get to 25%, but the revenues are going to be very substantial. I estimate in the $10 to $30 billion range.
Okay.
And then software consulting and licensing, actually helping either building the software or helping build the software, doing the AI training, providing the FSD, all of that is possible. And the margins there are, of course, very high. I say 85%. That's normal. With mid-level revenues, maybe ranging up to $5 billion, depending on, the package and how the package is.
Right.
So in summary, from a financial point of view, you could get a very high growth business with, targeted revenue of about 40 billion, which is not chump change, particularly when your total margins are going to be over the 30% mark. And you're not adding to overhead very much at all.
Right.
You're only doing what Tesla's doing right now, except you may be doing it in more premises and you may have to train a few more people. But, you're going to earn, something like $1 billion a month of net clear profit with almost zero investment.
Right.
So your return on assets are going to go even higher. Why? How is that terrible for you?
Right.
What you will do is you'll speed your opposition, your competitors' entry into the marketplace. This is not a terrible thing. This is a great thing because it'll transition the ICE cars to death very much faster, which will only expand the TAM of EVs dramatically faster. So ironically, I argue that by supporting and speeding up your opponents in their search for in their transition to EVs, you are going to improve your own revenue of your own EVs.
Right.
So, and finally, of course, you're going to dramatically increase the throughput of your EV charging network. I know you don't think that's many dollars, but I'll tell you, those are really good dollars.
Yes, and of course, if you start building stuff around those chargers, it's even better dollars.
Yeah. Bingo. So here endeth my lesson. You know, I'm very excited about the opportunity. You know, this is right in my wheelhouse. I understand this business very well. I understand the idea of, you know, supporting your competition and working with your competition. And the, you know, what Tesla did with the charging network is indicative of the energy these partnerships can bring.
Absolutely.
As opposed to the endless pain that a partnership that Ford, you know, has with Volkswagen is bringing.
Yeah, and I can add my stamp of approval. I both purchased from my competitors and sold to other competitors. We white labeled product all the time so that to our competitors. It is extremely good business. Yes, it's commonly lower margin unless it's consulting, but it's still a very good business, solid, usually pays on time. So these are really solid approaches to how to expand.
Yeah, but even if the margin on the sale is lower, the expansion of revenue leads to an, you know, overall operating, you know, leverage.
Yes.
And if people don't understand operating leverage, it's simply the larger your business for a given level of overhead, the higher the margin of profit you're going to earn.
Yeah. Yes. Said in a way, if you're making 100,000 widgets and your competitor comes in and now is going to purchase 100,000 widgets from you now, those 200,000 widgets that you make will cost you less per piece, driving down your own your own cost, at the same time making a profit on the 100,000, and you won't probably have increased your overhead at all. Possibly you might, but you might not have even increased your overhead at all. So it's a win-win-win. And as I said, the good news is they're usually very good pay, and that's not always true of all your customers. So that's a common good benefit coming out of it. Larry, this all started about 3 weeks ago. You and Brian Wang were kind of on the same page in a couple of different ways, saying, okay, Tesla, here's your opportunity. Yours was out there first with the idea of just selling them the entire operating system, the software. Brian came along and says, why don't you go ahead and sell FSD to the ICE cars as well, and to the existing and to all of the new cars. And even cars that are already out there and trucks that are already out there. So, and that was the capper that Tesla could become the leading tier one supplier to the industry. You didn't suggest it, but I suppose at the end of the day, they could actually white label cars for some of these companies, just like Volkswagen and some of these others do right now.
Yeah, the reason I didn't talk about white labeling cars is because that's a kind of, that gets people's, I've already had comments from people say, oh, Tesla you can't build your own competitor. But there's no reason not to white label cars at all. I mean, I think as long as Tesla is production constrained, it's difficult for them to build out, factories on behalf of clients. It's much easier for them to supply support and teach the clients how to do it than to do that themselves. But, in principle, I'm not opposed to it at all. I think it would be great.
And Larry, I've done the numbers. You might have seen my videos where I've done the numbers. And I mean, next year to go from 1.9 to 2.7, 2.8 million vehicles, that's probably not going to be that hard, given the Cybertruck will be a part of that. The next year, going from 2.7 to 4 gets to be just a little harder, even with Cybertruck and even with the Gen 3 vehicles. Now you're going from 4 to 6. That's 2 million cars additional in a single year. But then the next year, you're talking 6 to 9, and then 9 to 14 and a half. That's 5.5 million vehicles additional in a single year. I'm sorry, I did the math wrong. 9 and 13 and a half. So 4.5 million vehicles in a single year. That's still a lot. So at some point, the white labeling might be a way to accomplish that.
Yes. And, the rate of growth of manufacturing at Tesla, I think is less of a challenge. In fact, because I think Tesla's thrust to automate and to streamline their manufacturing methods, I think are really targeted at that point. I want to point out to you that 5 years ago, 7 years ago, 5 years ago, when SpaceX was talking about recovering boosters, I had a rather tough exchange with a senior executive from whose name I won't mention, from the space industry, where he argued, it was a he, so I've given that up, where he argued that it didn't pay because he figured out the development cost and he figured out the cost of refurbishment, and then he figured out that you'd have to recover like 10 boosters before it began to pay. I just want to close this. So I said, well, 10 boosters are not that many. He said, wow, it's never been that, blah, 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 blah. Well, here we are at, 200, almost 200. Can you imagine how much money they've made? So this idea of building to massive, unthought of volumes before is not new to Tesla or to Elon. And so it's just a question of imagination. It's just a question of imagination. 1 million sounds like a lot. 13 million sounds like incredible. 20 million sounds, but really it's the same thing, but just a little bit more.
But Larry, I wasn't actually talking about production. I think they can do the production. I'm not worried at all on the production side. I'm more nervous as a marketing guy. I'm more nervous on even this year. I've repeatedly said in these videos, okay, no, there's no demand problem for Tesla. Are you kidding me? They have to sell 600, whatever it is, 1.3. They have to sell 500,000 or 600,000 more cars this year than they did last year, when a couple of years ago they were only selling 500,000 cars. So the ability to move the metal at those levels more than you did the previous year is, I think, the more difficult challenge, which is why the white labeling would be the way to accomplish that. If I've got Ford and General Motors and Volkswagen and Kia all white labeling, a slightly different version of the car that maybe looks cuter to some of the buyers, then that helps them to move into that next level.
Well, time will tell. I'm sure that it's interesting to see how Elon will approach that scaling. I've said often that one of the weaknesses of Tesla is their inability to generate new models at a high speed. It's been one car every couple of years. They were getting there with the S, and it looked like they were going to bring out, and then the pandemic hit.
Yeah.
And I'm encouraged by the relative speed at which the Cybertruck seems to be getting to production. But I would like to see the new model occur very early next year, and I don't see it happening. I don't see how it's possible. They really need to scale that. They really need to learn to scale.
So Larry, I'm gonna kick back just a little bit here. I live in California, of course, and California now is at 25% of all new cars are EVs. That was just reported the other day that through the 6 months, 25%. And we know that in California, of that 25%, the vast majority are Teslas.
Yes.
So we drive a Model Y, and we have a little intersection up here. I'm in Riverside. I'm in one of the suburbs, and it's a okay middle class suburb. It's not it's not nothing like West LA. And if I go to that intersection and I don't see at least one other Tesla, I'm shocked. Okay.
Yeah, I mean,
I
get that.
it's 2 or 3 in the same intersection, but that's not true in Old Wine, Iowa. That's not true where I grew up in Creve Coeur, Missouri.
I get that. I get that. And I do understand that, Elon has revolutionized this idea of about 15 different models of cars, or 20 different models of cars, or 30 different models of cars for these different niches. I get that. I understand that. And, I have to laugh. General Motors are bringing out, they say, 6 new vehicles next year.
No, before the end of this year.
Oh, yeah, by the end. Well, yeah. They sold 36,000 cars at the beginning of this year, first half of this year. But I get that. It's just that Tesla have not developed the capability of building multiple new vehicles at the same time. The Roadster is 7 years out of date. Some of it has to do with the battery supply, and there are a couple of reasons. But look at the Chinese. Mm-hmm. They are developing new models all the time. Now, it's true that Elon has revolutionized the idea of one car fitting across a very wide market, and not breaking the market down into these little these focused model types. But I think that we're reaching the limits of that capability, and I think that even without thinking that we're reaching those limits now, we are definitely going to need a car in the under $25,000 category.
Oh, absolutely.
To get to the numbers that we're talking about. And ultimately, in India and China, there's going to be under a $10,000. There's going to have to be an under $10,000 car for the masses. Right. And that's true of Southeast Asia as well.
Sure.
So, I mean, I get it. But maybe that's a conversation for another day.
Another day. Okay. Larry, as always, super thrilled to have you on board. And, we're breaking news here again, folks. Larry is absolutely the first one to suggest that Tesla start holding themselves out as a tier 1 supplier for the entire product line, as well as even factory consulting, development, etc. Larry, brilliant as usual, and we appreciate you coming on. Hit like, everybody, if you'd like to have Larry come back with another brilliant idea. And hit subscribe and notify. And go to Tesla Larry, at Tesla Larry. He's doing this stuff. I'm sure that various slideshows and things, sometimes he's developing them on X, formerly known as Twitter, even as he gets ready to spring the entire thing on my channel. Thanks again, Larry.
Thank you, Randy.
And to all of you out there, it's been great talking to you.
Click the link below to get your paperback, Kindle, or audiobook now.